Hi everyone, this is Terence Tan, the Impossible Investor over here. Now, I just want to do a quick video over here after what market has done recently up until today, where I'm recording this video on the 25th of September over here. Now, if you're going to get into the markets or you're thinking about getting into the markets right now, what's so important that you must or you need to know before you take on any new trades at this moment over here in the markets, all right? So let me get to it over here. What the market has done last night over here was it started positively, but it ended the night over here on a negative note. So as you can see on my screen right now, the S&P was down about 0.84% and the Dow Jones also down about 0.53% over here. Now, this is not what's really important right now or what's really scary right now, but what you must really know over here is this. We all know that throughout the world, or at least in Europe and in the US right now, many countries are in what we call a race towards zero, or in fact actually a race towards the negative zone over here. Now, what I'm referring to is actually interest rates. Many banks across Europe's or central banks rather, across Europe right now has brought down their interest rates. We're starting to see some Asian countries do that and take part as well. But what is happening right now is the US is also starting to lower their interest rates. It's a pretty quick U-turn in the sense that not too long ago, earlier this year, they were only just considering about, trying to start hiking up rates. But it was a quick U-turn now, and they're joining the rest of the world in trying to lower their interest rates as well. Actually, it was a surprise decision last week where everyone was not expecting the Fed to make another rate cut, but in the very last minute itself, it actually made a decision to curb short-term funds over here by lowering interest rates and getting some funds out there available for the whole banking system itself. Now, so technically, whenever we see a cut in interest rates, the markets usually rally, but we didn't see it this time around. So let me get to some simple reasons why this is happening right now. As we can see over here, after the last rate cut, we actually see a quick uptick over here in the financial sector. So what I'm actually showing you over here is just the financial ETF over here in the US stock market. The symbol is XLF. Now, so we can see that in just the last 1 month itself, from September, just the start of September, it has rallied from a price level of about 26.50 all the way up to about 28.50 over here. So that's a really quick rally for an ETF stock, which we rarely see over here. But what we're seeing over the last couple of days over here is it's starting to turn down over here. All right, and the technicians in you would probably start to ask, hey, Terence, that a double top that I'm seeing over there, is this actually the turning point? I don't know. I'm not per se a very technical based trader over here, but I do know my stuff. This is just some simple things you have to look at over here if you're technical based. Now, but what's more pressing is actually this. If you actually know how the whole game works, a lower interest rate environment provides more cash flow into the system itself, but it's actually a bad thing for the banks. Right now, why do I say it's a bad thing for the banks? That's because the banks make money on the interest rate difference over here. Now, so if the current Federal Reserve interest rates are going to be low, right? That means the banks are not going to be able to make a lot of profits by lending out money at a much higher interest rates over here. So lower profits simply means lowered stock prices over here for banks and banking stocks. Now, and what you do know now is also that, or if you do not know, is actually that the financial stocks or the banking sector as a whole comprises or make up about 15% of the S&P index itself. Now, so while you're looking at the S&P going up over here and staying strong, but if the financials do start to turn over here, it's going to start pulling the entire S&P along with it. So, that's kind of something that is feeling the race towards another correction that we are about to see over here, or we might see. Okay, now, actually another pressing problem on top of that over here is actually this. After that agreement of a phone call was going to be made over here, what we have seen immediately after that was also that the fact that the tech sector is actually recovering. All right, so we have seen many tech stocks that was affected by the trade war over here had a quick recovery in the month of September as well. But as we know this right now, what I can say is the whole trade war is far from being completed over here. So there's still going to be a lot of volatility in place. There's going to be goods and bads between the two presidents over here as they're trying to work out, what's the best deal that each side can get for themselves over here. Now, but going back to that, we can see Intel as a whole over here has reached the same double top and is coming off the double top over here. So it's anybody's game over here. Right, and on top of that, if we look at some of the FANG stocks, comprising mainly of Amazon over here, right, what we're seeing is, Amazon has, kind of spiraled from the month of August all the way down, right, and what we have over here is a little bit of a sideways channel over the last 2 months, right, but as of yesterday, it actually closed below that channel itself over here. Right, if you're another kind of like technical based people, what you would see over here is also that upward trend line over here, right, that cuts across, and yesterday was the bar that we see closing below the upward moving trend line. So that means Amazon has kind of break that upward trend line that is possessing in the charts over here. Now, so all these points towards negativity in the stock prices, and we can see that the selling has increased volume over here over the last couple of days. So that means people are participating in this selling in the Amazon stock. So there's going to be downward pressure when it comes to Amazon as well. All right, now we are also seeing the same thing happen to Google over here. All right, so there's an increased volume in the sell-off. All right, okay, now so Google is also coming off what we have over here, kind of a top that they had made recently somewhere at the end of July. All right, now, so it's moving on the down over here from a resistance level. All right, now, so we may actually see a downside all the way to this level over here of about 1160 or 1150 over here. Now, so if we have Amazon, we have Google that's going on the down. All right, and then we have Intel over here that's also moving on the down. All right, another tech darling that we have over here in recent times is actually Microsoft. All right, and Microsoft is also hitting its double top over here and coming off the double top. All right, but what's really interesting when it comes to Microsoft is actually this. All right, if we compare the two tops over here, all right, what you actually see is a divergence over here on some technical indicators, all right, whereby we are seeing the divergence over here, which points to weakness in this price move over here. And again, what we're seeing is the last 3 days of selling off in Microsoft has come in with increased volume as well. Now, so all I'm saying over here is this. The tech sector looks very vulnerable. The financial stocks looks vulnerable over the next coming month because of the cutting interest rate environments. So, if both the financial sector as well as the tech sector starts to provide pressure in terms of all these big stock prices over here, right, you're going to see the effect happen and play out in the entire index or the S&P 500 as a whole, because financial stocks have a 15% weightage over here, and technology stocks also have another 15% weightage, and there's a total of 30% weightage over here in the entire S&P 500. So when they start to move in tandem over here on the downside, it's going to immediately drag the index over here as a whole. Now, so this is the main reason why in the Impossible Investors community, we have been very careful, very selective with the trades that we're taking on right now, because what we have from the start of September, it's a really crazy rally from all the way 2,800 levels in the month of August. Right, we're seeing it hit near the all-time high of about 3,000 over here. That's a 200-point move in under a month over here. As the trade war condition starts to look better, right? But again, it is not done. The deal is not sealed, so anything can play out again in the coming days ahead. Now, so if you're gonna pick trades over here, do know the risk that is involved over here. All right, be very selective. Think very hard before if you want to get into new trades in this environment over here. Yeah, so this is what I want to make sure, or the message that I want to get across to all of you who are trading the stock markets right now. This is Terence Tan, the Impossible Investor, signing off. I hope you enjoyed this video. Now, if you want to receive more such videos from me in the future when I start to produce them, do click on the subscribe button, or actually follow me on my Facebook pages over here, or my Instagram as well. All right, now, so with that, I'll end this video over here, and I look forward to seeing you in my next video. All right, catch all of you later. This is Terence Tan, the Impossible Investor, signing off.